A warm welcome to Business Daily right here on Trust Television. I am Yusuf Akogu. Let's take our business top stories. Glad to have you back. Just yesterday, the doyen of the Nigerian accounting profession, Pa Akitola Williams, passed away at the age of 104. Chief Akitola Williams was the first chartered accountant in Nigeria. He was born in Lagos on August 9, 1919 in Lagos State. He was the first person to become a chartered accountant in Nigeria and by extension in Africa. This is an interesting profession the accounting has become in our lives. We wish our condolences to members of his family at this trying time. Now we go to the stock market to see how the markets are doing. How the market did yesterday. It closed negative yesterday, following that report, that letter yesterday from FTSE Financial Times Stock Exchange that downgraded Nigerian stock market from frontline to unclassified. What this means is that market value has been reduced to zero. If you look at it, we'll talk about that much later on the show. 5.20.133 million volume of shares exchanged hands yesterday among investors, value at 8.334 billion naira in a days of close to 10,000, of course 9,914. The all-share index dipped marginally there by 1.24%. Let's look at the gainers on the day. Of course, the like of NNFM actually gained 9.96% yesterday to close at 13 naira 25 kobo per share. Owando back on the gainer stay again after that break, 9.74%, and of course to close at 8 naira 45 kobo. The share price remain on the increase from 5 naira as it were to now 8 naira per share. If you're an investor there, I think this is the time for you to put in more money in Owando. Of course, Computer Warehouse Group, a software company, 9.000 it closed on Monday to close at 6 naira 30 kobo per shares. Let's look at the gainers, the losers. Len Africa, minus 15.64%, the highest loser in a single trading day for a very long time. 3 naira 29 kobo per share it gained yesterday. NASCON also lost 10%, 52 naira 20 kobo per share. While N-Transat, recall in the morning yesterday, it was on the losing side. It actually lost 10% on the day to close at 9 naira per shares. Let's look at the top traded equities by volume. Of course, United Bank for Africa, UBA, 73.9 million volume of shares. Access Bank Holdings, the mother company of Access Bank, 57.7 million. And of course, Transcorp Nigeria, 52.7 million volume of shares were traded. Let's look at the performance across sector, largely red, of course. What will you expect? The banking sector down 6.11%, the industrial sector 0.28%, the consumer goods sector 1.45%, of course the oil and gas 0.10%, and of course the insurance sector 2.07%. The biggest loser on the day, is the banking sector. Of course, largely the likes of GT Bank, the Territorial Bank, Zenith Bank actually losing so much. Even Access Bank as well, down there by 8.57%. Let's look at the rest of Africa, how the markets are doing in Africa. Look, ironically, they are green, 0.62% in South Africa, 0.77% in Ghana, and of course 0.7% in Nairobi Stock Exchange down there in Kenya. Now we talk to a stockbroker, Mr. Steve Nwachukwu, who joined me virtually now from Abuja. Good morning, Mr. Steve.
Good morning, and thanks for having me.
Yes, glad to have you. Mr. Steve, what do you make of this letter from FTSE downgrading Nigerian Stock Exchange from the frontline index to unclassified? What does it mean? Can you explain to us more?
Oh, well, the situation in the market is as a result of the letter you talked about, which has to do with the downgrading of Nigerian exchange market, the Nigerian Stock Exchange, from that of the frontier to unclassified. What it simply implies is that, first, the agency itself is a private entity based in London, is one of the rating agencies, and what are their usual line of actions or usual line of thoughts is to galvanize opinions or opinions of investors around exchanges across the globe. So they are, like I said, a private entities that rate exchange markets across the world. So they have a couple of indexes, and one of which, or two or three of them, where Nigerian exchange market or index belongs. As a result of a couple of issues they've looked at, some of the criterions to qualify you to be in that very rating agency list or index. Nigeria has been falling in a couple of them, like the issue with the repatriation of dividends earned by investors, and also to repatriation of capital, which is a fund. That's what we mean when we say we need more of foreign direct investment than foreign portfolio investment. When exchange markets where investors cannot be granted their exit point. Yes, the entry point is granted. You move in your cash, you buy, you invest. There should also be some level of guarantee to your exit point. So this is the reason why they have decided to downgrade. Downgrading here means that they are actually suspending the Nigerian market for now. It's a no-go recommendation for them, for investors across the globe. Remember, I said they are private entity. Their main job is to galvanize the opinion of investing public, international investing community. What they just did now is to tell investing community of investors around the globe that Nigeria is a no-go area, given the reason why they have to remove us from their index, which given the reason being that if you bring in your money to buy into any of the exchange or any of the markets in the market, both in the fixed income and the capital market, that you will not be able to repatriate or have available forex window to repatriate such capital.
No,
so these are the implications.
All right, Mr. Steve.
First, is a red flag for international investing public that Nigeria is a no-go area in regards to repatriation of your capital or your dividends you have earned investing in such companies. So that's just what they simply mean. And let me say it, that this has nothing to do with fundamentals of the quoted equities at the floor of Nigerian exchange. It has nothing to do with the richness, profitability, and yielding or capital growth that investors may get from investing in any of the quoted companies at the floor of Nigerian Stock Exchange. It has nothing. Rather, it's only
right,
the
Mr. Steve.
aspect of repatriation of funds. That is where the issue is. The fundamentals of quoted stocks at the Nigerian exchange is still strong and sound. The only challenge they raise is when you buy, sell. The ability to
Hello,
have
Mr.
forex
Steve.
to repatriate such funds. That is where they have issue.
All right, Mr. Steve, is it the right time for us to have this kind of rating, given the fact that in the last couple of months we've seen the market on the upward trajectory? Is it the right time for this kind of ratings to come?
Well, you wouldn't say it's about time. They decided to come up with their findings, and their findings has been in existence. In fact, we have been in their watch list since 2022, June 2022. Given the fact that we have been having this forest challenge to repatriate, for foreign investors to repatriate their earnings or their capital to their home countries, or to move their funds to other investments countries of their choice. This has been a challenge for most of the international investors. Also have in mind that as at last year, the same forest challenge that we've been having, what you may call forest scarcity. You remember some of the international airlines withdraw their operating routes to Nigeria.
Right.
If you remember, sometime, because they have challenges with Central Bank of Nigeria remitting of their funds to repatriating the funds that have been stashed with CBN. So the same issue has been a lingering issue, that the issue of this very scarcity of forests under remittances and all the rest have been the challenge in our forest market. So it's a question of the challenges in the forest market, not the fundamentals of quoted companies. Our quoted companies at the floor of Nigerian Stock Exchange is sound and rich. Have in mind also that what you saw was also in line. The market has been reacting to it, and this morning or yesterday, CBN also released another twin double-barrel shot to the market that's banning commercial banks from paying dividends from revaluation of forests. The gains they have gotten from the revaluation of forests, from paying dividends from such
Mr.
kind
Steve,
of funds.
Mr. Steve, I must hold you there.
It's also a big challenge to the market, and then investors have been reacting to it at the floor of Nigerian Stock Exchange. But we are seeing, as I speak, intraday trading shows that the news is weighing down, and investors are actually counting their losses and trying to take position.
Mr. Steve,
so
I must thank you for your contribution on the show this morning. Mr. Steve Nwachukwu is a stockbroker talking to us from here in the nation's capital in Abuja. With that, we'll take a very quick break. When we come back, we'll go into our discussion. Don't go away. Glad to have you back. It's still Business Daily right here on Trust Television. Now we're going into our discussion. We're looking at the key takeaways from the president's visit to India and, of course, the United Arab Emirates. Let's look at the Nigerian outing at G20 Summit, the 18th G20 Summit. I have my guest in the studio, Dr. Emeka Okengo. He's a development economist. Glad to have you on Business Daily.
Pleasure to be here. Thank you.
Your impression from the president's visit to India at the G20, and of course, the stopover in Dubai has resolved some of the diplomatic issues we have with the UAE. What's your immediate reaction to it?
Impressive. Very, very impressive. Okay, it was some economic diplomacy that's beared some very positive fruits. It's very, very impressive.
All right, let's look at some of the deals that has been signed, that the president did enter into, the $14 billion deal for the power sector, the steel sector, and all of that. How would this affect our economic reforms that we are actually carrying out so far?
Okay, well, that's actually where the work begins to match the talk. Okay, in those deals that have been signed at the level of the presidency, and this is where you have that economic diplomacy. And at that level, what you say is that we are interested, we would want to. Okay, it is now in working the talk, it is now in developing the framework. Remembering at one time that in the last administration, the former president had also gone to Russia to have gotten a $3 billion dollar deal or something, to revitalize Jakarta. At the level of the presidency, it's like I said, it's good diplomacy. All right, it's proper diplomacy. But where you begin to now, have the proper challenges is when you now start drilling down. The drill down will now be the implementation framework. Now, this is where you will now have policy, program, action. Now, this is where you now have, where are we matching? What are we bringing to the table? Is it going to be human capital? Is it going to be infrastructure? Is it going to be funding? Is it going to be market? Is it going to be offtake? You understand what I'm saying? So it's not enough for you to, get that deal signed. It doesn't translate to moving 14 billion, into an escrow account. It now means that there's an intention and a willingness, okay, on the part, of that government. But what the Dubai trip, having the dealt with the Basa thing that has been lingering for a very long time.
It's part of the agreement that has been resolved.
Yes.
The diplomatic issues, the issue of the ban, the immediate reversal of the ban placed on Nigeria travel.
That's what I'm saying. That's the Basa thing. The Basa thing it resolved is a very major issue. But it would again be more efficacious for me if we had something that we were taking there. Okay, because what's going to be happening is that all we'll be taking there will be cash. This is your intro talking about, repatriation of funds. I mean, if we are taking goods and services into the UAE, okay, even if it's something as little as a very, very central need that they have, which is called mutton. Mutton is a sheep meat. Okay, they eat a lot of it. Now, if we had even, gotten a little bit of our market share, now what would be repatriating would have been, foreign exchange. But in all, it's a good start. It's commendable. Okay, he should be supported and appreciated.
Indeed, we see so many world leaders cutting our president there for one investment discussion or the other. Do you think Nigeria, as it is now, is positioned? The president did tell them that Nigeria is actually well prepared to receive quite a whole lot of investment for FDI coming from Europe and America. Do you think we are well positioned and ready, given the kind of rating we are getting from some European agencies?
Nigeria is the biggest economy. Nigeria is the biggest economy
in Africa.
In Africa.
But the impact of that size on the citizen is also very important.
Yeah. Nigeria can sit very comfortably at least 7 to 8 of those European companies or countries in our land space. Nigeria has practically everything it needs to become a major player, in the Committee of the Nations. Okay. What we just maybe we have not been able to aggregate properly, we be like what we just discussed earlier, the process. Okay, so even if you had Mr. President, having everybody cut him, at that level of cutting, yes, but at the level of implementation, that is where, you might begin to now have, the red lines or the fault lines. But it's a good thing. What I'm trying to say to you is that Nigeria would always be cutted. Okay, because 1 out of every 5 black people in the world, by our population statistics, just posing it against, black population, is the Nigerian. There is no natural resource known to man that doesn't sit in Nigeria. Okay, we have more than enough land to be able to feed the world. Weather, even when it is at the harshest point, okay, will give us access, to renewable energy. Okay, so it's not a country you want to wish away. If we get our acts right in Nigeria, and again, how many countries of the world even have our population, our youthful population? 55% of our population youthful. Imagine if you can be able to, aggregate that energy. Let's even assume that you turn them into a military force. You know what that will mean? What it simply means that we can present at any point in time a minimum of 60 million able-bodied young men in an army. That's not an army you want to overlook. Okay, so these are the issues but you must be able to turn those human resources into human capital. You must be able to turn those natural resources into products, okay, for you to be able to now compete in the international market.
Okay, there was also discussion around foreign exchange management. The deal was actually negotiated between Nigeria and the UAE in the area of foreign exchange liquidity program. This brought me to the currency swap agreement that was signed in 2016 under the former administration. Do you think some of those deals, do you think it has actually achieved its desired result? Well,
the moment you talk currency, you're talking about currency being the means of exchange. If something drives the currency exchange. Okay, just like the one we did for the 3 billion. You remember, it was forward purchase agreements against crude. So there was a product. Okay, so what product are you going to be, forward purchasing against or swapping against? Well, you won't swap naira for dollar now. You're going to be swapping naira or dollar against gari, for instance, dollar against cocoa, dollar against palm oil. So it depends on what it is you're bringing, to the table. And that is why productivity is at the key of whatever it is we want to do. Look at other climes. I mean, some countries of the world have taken their petrochemicals up to now, producing what they call non-woven. Okay, non-woven is that petrochemical, that you use in making clothes. Some of them have even gotten what they call the edible petrochemicals. You understand what I'm saying? So some of them have produced petrochemicals that you can use in, planting in the desert. They now are able to hold your soil or hold water, and then you can begin to now regreen. China has used this and recovered over 30% of its desert. So they can plant whatever it is that you plant, in your rainforest or your Sahel regions, as it were. So point I'm trying to make is this. In doing whatever it is you need to do, you need to match it against something. When we were the largest producer of palm oil and cocoa and timber, our currencies were trading on the streets of even New York and UK, and even at a higher value. So whatever it is you do.
At what point did we lose that relevance?
We lost it at the point where we became comfortable with people now giving us everything we needed. Okay, you wanted suits, you wore Italian. You wanted George, you wore Indian. Okay, you wanted rice, you ate basmati. You wanted this, you ate corned beef. The moment it became a lot easier, and it was introduced by people who didn't understand it well, through just one simple program they called the import substitution model. Now, they didn't query what we were substituting. Because the moment you use substitution, it simply means you're producing it, but not producing enough. Okay, so what that simply did was it turned completely into import dependence. All right, everybody who had an import license was no longer now importing a shortfall. They were now importing for the whole market. All right, and I remember at one time that I think they needed to now ban it or something. When they started talking banning Morocco, banning rice, banning second-hand clothes, banning. But when you were banning, what were you replacing with? What industry were you really serving? Because even at the level of industry, you also now had what you call the subcontracting model. It's important you understand this. So you didn't even have manufacturing outfits okay, that were supporting your import substitution model. You had value addition places that were just doing what they call valorization.
All right. President Tinubu later this week will participate at the United Nations General Assembly in the US, and he has been invited by the United States Chamber of Commerce and Industry to ring the closing bell at FMDQ in the US. What do you think, what do you make of this global acceptance? How would this translate to economic gains for Nigeria?
Well, don't make it, you see, he is the president of the biggest, if you may, most powerful nation in black, Africa, or in Africa, not even just black Africa. So they are not giving us any privileges by asking our president to come and ring the closing bells. Like he said, they are cutting him. But you see, what should be our concern is not that he rings the bell, but against what? Okay, what are these programs? How are we able to bring, these latent, capacities, as some of them I've just mentioned to you? A country that has, 6 billion metric tons of a coal or iron oil is not a country you wish away. They can crash any, mining market if you understand it. The problem is, we are not understanding the back end, requirements for us to be able to become, major players. It's not enough for you to register companies or establish companies. You can today again establish a company called Dr. Okengu Nigeria Limited dealing with steel. If you do not have iron ore, you will just be what they call a portfolio company.
Absolutely. I must thank you, Dr. Emeka Okengwe, development economist. I must thank you for your time on the program today. We appreciate it.
Thank you.
With that, it's a wrap on the show today. We'll be back tomorrow. I am Yusuf Akogu.